Hey everyone, so we're going to dive into Bitcoin today, take a look at the market and the CPI numbers that came out today and how that is likely to affect the direction of the market and how high Bitcoin is actually likely to go. We'll also take a look at some of my main scenarios and what I'm going to be looking out for so that you can stay 2 steps ahead of the market. Don't forget to give me a like, that massively helps me out. So let's get straight into it. So what we want to find out from today's CPI numbers is the bottom in? That's the real question that's on everyone's lips. And in order to find out, and give us a better idea of if that is the case, we want to find out if the pattern that we're in is most likely to be some kind of bottoming pattern and if we're likely to move up to the next level. Now, CPI came in at not only lower than June, okay, year on year, but also lower than expected, as the projected was, I believe, 8.7%, but we actually came in at 8.5%, which was better than consensus. So that's actually a positive. And what we do know is that whenever the inflation rates start to top out and start to have that sort of signal that we're at least sort of flatlining, okay, it's typically that the market has probably already put in its bottom, because remember, markets are always forward thinking. They like to see what's happening ahead into the future. So if they think that the interest rates have already topped out and it can't get any worse than that, it's highly unlikely that we're going to see a lower bottom than 17.5 if that's the case. Now, we're currently in this pattern here, which does look like a little bit of a bear flag, and you know what my stance is. I still think that 2836k is more likely, and I was saying that here with all my buy orders that I got at about 20 and 19,000. But the reason that I don't think that this is likely to be a bear flag is that the longer this continues and just starts to form this pattern, what can you see? Okay, you can just see a series of higher highs and higher lows, and when this starts to happen in a fashion that is quite structured, okay, and you can see that we keep knocking on the door and we're starting to really, tap into that $24,500. If we get a clean break and close at about 24,500, 24.7 $1,000, I do believe that we're going to go straight to 28,000, because essentially this is looking more like an uptrend than a bear flag. You can see that with every bear flag there was a lot of weakness in the market. And if we just take a look at what we did in the prior structure back in May, basically we had this head and shoulders, and as soon as we basically got a lower close, in the lower part of the range, okay, we ended up collapsing and moving down to the next level below us. But that hasn't actually happened yet. You can see that every time we've actually come down and retested some of these lower order blocks, if we just drop this down to the 4-hour time frame, you can see that whenever we moved up, okay, we retested some lower levels and then came back up, knocked out a new high, retested, and never really got a close down here at about $18,000 or so, $18,500. And because that never happened, that really gave us the base to start propelling and moving higher. And remember, accumulations and consolidation patterns can last a month, they can last 3 months, they can last an entire year, okay? So there's no specified time that they need to last. And I just wanted to draw you back to a few of the other bear market lows and some key structures, just to show you as well that it's actually playing out a lot more similar in terms of a pattern, okay, as we did in the last bear market. If you just take a look at the COVID low that we got, okay, is that I did think at some point that we would maybe, retest some of these areas at about 7,000 when we moved from 3,700 to about 7,500. But you can see that price was holding, and you can see that essentially the worst of the news event had already occurred, and that's why markets are always forward thinking. And you can see that we basically created a high, we created a low, and then we created a higher high, and then a higher low, and then again we did that similarly over here, and we started grinding our way up until the volume became pretty tight. We got into a narrow range, similar to how we did, how we are currently doing just over here, where we're basically starting to form a narrow range. So I would expect this, that if we start knocking on the door at 24,500, then potentially we can move up to the next level above us, okay, and maybe challenge, whatever that next key level above us, which is about 28, and after that will be $36,000. And you can see that when we're doing this, the longer that we basically consolidate and move sideways in this fashion and almost start to form a little bit of an ascending triangle, okay, that is going to be a sign of continued strength in the market. And I don't necessarily see this as an ascending triangle. However, you have to get the gist of what the pattern is trying to tell you. Patterns are just trying to give you information on a chart so that you can could make a better informed decision. And essentially, you're basically getting these series of higher lows, and you're knocking on this region, okay, of about $24,500, and essentially that's why we would expect this pattern to break up about 60 to 70% of the time. And if we look at the last bear market low, we actually formed a consolidation pattern for about 3-4 months, okay. Currently we're probably in a range of about 3 months, okay, so maybe we go on a little bit longer, but you can see that the premise of what we had before is, again, some kind of triangle pattern where we're basically making these higher lows, fill in all these order blocks, come down, move up, back test, and then that's the market showing you that we're holding these levels, get into a narrow price range where volume gets quite tight, and then spring back to the upside, okay. So that's kind of what my bias is at the minute, and I'm sticking by that given the information that we've got. Now, the second thing that I want you to look out for is if we do end up breaking out from the bottom of these consolidation patterns, okay, maybe this is that potential consolidation pattern, like I said, okay, and we end up getting these massive weekly candles like you can see here, okay, back in the last bear market, and we don't come back down and retest them right away, and we get a massive rally, okay, to these loftier targets. Maybe something like this ends up happening, okay, and we end up just deviating a little bit lower. I would still expect these levels to get retested, because every single time, no matter what the impulse is on Bitcoin, we nearly always come back and retest those levels, okay. So you can see in that 2015-14 bear market, even when we've got this massive impulse to the upside, we still came down and retested, okay, and formed that market structure again. We moved up, formed an ascending triangle, moved back up, come down and retest it, okay, move back up impulsively, come down and retest it, okay. So just look out for these things, that if we get a massive rally into Bitcoin in the coming month or two, I'm still open-minded about having that Q4 end of year rally, correction back down to the to retest these lows at some point later in the year. So if we start to move up in this kind of fashion, I am going to look for key areas to take profit where we might still deviate, come back down, retest the level, and then use that as support, and then continue to basically form some patterns where we might move up to some of those new all-time highs. Because remember, it has to all be a process, so don't necessarily FOMO into Bitcoin at these levels. If we start to gain some traction and move into like 28,000, 30,000, a lot of people are going to be starting to jump on the bandwagon there. But if we start to see week after week of green candles without correction, okay, then I would expect some of these lower levels to get tested at some point later in the year. Now, if we do get a big rally in that fashion, I am expecting some key levels to act as resistance, and some of those levels that I would expect would be this floor that we obviously broke down from, which is the obvious 30k floor. So I would expect some kind of resistance there, okay, which is also, we've got a CME gap at 28,000, which is why I'm looking at that. And if we get some kind of like continued impulse, we've got a CME gap at about 36,000, which is again the order block and the area that we broke down from that really led to this whole massive downside move. So that's another level that I'm looking for us to potentially deviate from. And then we've got really just this whole big range or region at that maximum of about 48k to about 40k, which is again probably the upper region that I would expect us to move down from if we were able to reach that high, as definitely a potential for some legs for this rally to be looking out for. So you've got those three levels: 28,000, 36,000 or so, 37,000, and then you've got somewhere in the region of that 40 to 48,000, which is some strong horizontal resistance Okay, for Bitcoin, if we just look at that level, you know, you can just see areas of over here where we've had weekly sell-offs, okay, where we weren't able to get above that. So that's why that horizontal level, again, at about $45,500, somewhere in that level is going to, you know, probably provide some key areas of resistance. And in terms of Fibonacci levels, we've got that 61.8 as the absolute uppermost target that I would expect that, you know, if we were to move that high. I know that sounds like out of the realms at the minute, but like I said, price moves pretty quickly, and if we did do something like that and then we deviated back down, what an excellent buying opportunity this would be, okay, to come down and retest that level. Like I said, I've always got cash on the side and I'm waiting for that. If you start FOMOing here and then you don't have a plan, okay, and you just hope for the best and think that the bull run is just going to happen, okay, then, you know, that's probably not the best way to go about it. So that's my primary, you know, way that I'm going to be looking at the market, is I'm looking for a potential impulsive breakout here and looking for signs of, you know, some of those 3 key levels to be hit, and then probably get a retest of these levels, you know, at some point later in the year. And depending on how the structure ends up playing out, we might continue to consolidate sideways, or maybe we do move quite higher and the market has that knee-jerk reaction to the CPI, is that, you know, if we do move higher, okay, and, you know, I just would expect some of these lower order blocks to get tested at some level, which again is going to be the area, okay, that we broke out from, okay, to get retested again. So let's say at the moment, you know, the retest area might be somewhere at around that $23,000 mark. If we were to come, if we were to hypothetically move straight back up from here and then deviate back down, that's the sort of structure that I would be anticipating. But we would still want to be cautious, and, you know, let's see obviously what is happening with the market and how it plays out in the next few weeks. The only reason that this would get invalidated is if we start to really create some key lower lows and we break out of this uptrend, then, you know, that might open the door up for some of these lower targets if that were to happen. And that would probably mean taking out, you know, the first level, which would be 22.3K. And if we did that, then, you know, we would want to come down here and potentially create a higher low. And if we basically took out 20.7, then that really opens up the door to attack 17.5K. But at the minute, like I said, that shouldn't be your bias. What your bias should be is that, you know, given historical data and the way that price action tends to move, is that I would still be expecting some consolidation maybe in the next week or two, and maybe to move sideways. And if we basically get this really critical point of price action over here where we're just, you know, building up at 24.5, then expect a move up here. And if we break 24.5K, I'm expecting a move up to this 30,000, 28,000 region pretty quickly. And no surprise, we've spoken about the DXY, okay, as you know, when that shows weakness, that opens the door for Bitcoin to show some strength. Like a tide in the ocean, when you don't have current swimming against you, it makes it easier for you to make advancements, okay? So just something to bear in mind. And you can see that in the DXY that we basically broke out from this order block, okay, moved down, retested this order block as support, but now failed support, okay, because now what we're doing is we're creating the structure to move lower, because now that we've basically had this structure that we tried to bounce up from, we've you know, essentially now made a lower high, and now we're making lower lows. So I would expect that if this order block gets taken out, this is showing weakness in this order block in terms of price structure. So if the DXY also can continue to tap down into this level, okay, at about $100, or even potentially lower somewhere here, there's some few untested order blocks at about $100 that could really start to give Bitcoin some momentum. But if we lose you know, $103, I'm definitely expecting to tap into about 102 pretty quickly. So let's keep an eye out on the DXY as well. That's it from me today. Don't forget to like, subscribe to the channel to keep up to date with all things crypto and Bitcoin. And until the next video, I'll catch you